In terms of sectors, personally, we feel anything which is close to climate, I think that's going to do well because of India's commitment to COP26 goals. And,
we say green, sustainability. I like to use the word clean tech. I think that clearly is a segment which is not going anywhere in a hurry. And it's a flavor for decades.
In the fintech space, it has more to do because fintech is about, there's a lot of information available in the market and you need to just take it in and churn out something meaningful.
Anything which is related to consumer. So even if you are a fintech or an edtech, but if you have an intersection with consumer, I think those models are going to work well. I think
particularly in India, two emerging sectors which I've seen really come from nowhere is defense tech and space tech.
So everybody calls generative AI as more than that, right? That machine learning part of it, which not many people are talking about. Everybody's talking about the chat thing, right? But that is one aspect. I think it's a machine learning aspect which is going to play a bigger role in the fintech space and many other spaces as well.
Wherever technology, AI is solving genuine problems for B2B or B2B2C use cases, even for B2C as well, but B2C, again, it becomes an idea of unit economics in the longer run.
And whether we can call it a business model or not, but I think quick commerce is something which, honestly, I'm surprised. 3 years back, I never thought this would become the industry it has become.
The economies are tight so much globally. India, so many things are happening. Can you predict what's going to happen tomorrow, right? But if machine learning gives you that insight of saying this can happen with this much probability.
Hello and welcome to Talking Through. Today we are going to discuss about startup ecosystem and its challenges and opportunities in 2025. For that purpose, we have set up a fireside chat with three gentlemen, Manish Ahuja, Sandeep Jain, and Abhishek Chauhan. We'll listen from them and their thoughts. So let's go ahead. First question to you, Manish. For a startup like yours, IntelliInvest, what kind of challenges are you expecting in 2025?
Within India, I think it's a growth story. The government is here and another 4 or 5 years, we don't see any such challenges coming up. But at the same time, I think the economy is going through a lot of turbulence. Now, the reason for that being is it's an association with the global world, right? The interest rates globally hasn't dropped. Inflation is high in India as well as outside. Now, with interest rates not falling down, what it means is the funding cost is high. You can see the repercussion on the equity market. You have seen how crypto has come along as well. So all in all, what I see is it is going to be very challenging, and not just from a macroeconomic point of view. There would be a lot of supply related things as well. I think there has been a major push into the green sector, green energy. I think that is where the opportunity lies. But challenges, yes, a lot of them.
Yeah. Sandeep, as an investor, what kind of challenges do you see for startups? Because you've been associated with so many of them.
I think three primarily, if I was to categorize it. One is obviously funding. It's always a challenge and it's always something which startups have to deal with. Second, to my mind, talent is going to be a big challenge for startups, and it's only going to increase despite all the people coming into workforce. But still there is a lot of skill gap between what, educated professionals bring in versus what the startups require, also in terms of mindsets, etc. And third, what I see is that the intensity of competition is only going to increase for startups. For every problem, there are going to be many people solving it. So you have to find your niche really. So those are the three that I really think are on the top of my list.
Right. And do you think the talent in the market, which is employable or hireable talent, is it too expensive right now?
So obviously it is becoming expensive. I think particularly if you look at the technology side of things, and certain skills are becoming more precious than others. But it's no different than what it was. Every time, every few years, the kind of talent we look for, that continues to change. And probably today we are at that space and this is despite the fact that there is still not so much being absorbed by the IT industry, for example. There have been even some layoffs, etc. But still, when you go finding the right kind of talent at the right price, as you are saying, it's a challenge.
And Abhishek, from a incubator point of view and a consultant point of view, what kind of challenges have you seen, coming up, so to speak, and how are they different, do you think, are from 2024?
Sure. Thanks, Dipankar, for having me here, first of all. And since I'm the last one, probably it's not too easy for me to answer that question. But yeah, I'll try to add to what my fellow panelists have just outlined. I think just to add to the list, it's a challenge and an opportunity. I think Manish talked about green. I think whichever sector you're working on, somewhere the angle of ESG, governance, keeping climate, carbon credits in mind, even if you are a tech startup for that matter, I think it's going to be a challenge and an opportunity. So if you're an early stage founder, think about where you can go green in your supply chain, in your value chain. I think that's going to be important. Another challenge that I continue to see is from an IP perspective, right? So it is critically important that what is the design or product or software. What I see a lot of startups don't go for trademarks. An interesting case study is I'm now working with a client who is doing OS for autonomous robots, and the name that he has chosen is already taken, and he has already gone into the market with that name. So how you can be really wary about getting a trademark or IP right from the word go. You do your research right in the beginning stages of the startup. So I think IP is going to be a continued challenge and an opportunity. Somebody who thinks of it beforehand is going to be certainly more successful. And beyond that, even for early stage founders, I think Sandeep talked about funding going to be a challenge. That's going to be a challenge. And even for early stage founders, earlier it was not a big challenge, but we saw the trend changing from 22, 23, 24. Unit economics is going to be critical, right? So if you are thinking that, okay, after I develop my MVP, I'll think about unit economics. No, you can't do that mistake. You have to think about, in ideation stage itself, you need to think about unit economics as a focal point of how your product, right from when you launch it into the market, is kind of closer to positive unit economics. And then there is a trend that you have identified, because investors are asking that question, even if you're an early stage, even if you have not thought about how will you design your product, right? So I think those three I can add to what my fellow panelists spoke about.
Manish spoke about the turbulent market that we have at the moment, and the economies that are surrounding. Even in the developed economies, there is significant turbulence right now. So is it also affecting funding, that people are more cautious what they invest in? Is that so?
Yeah, absolutely. I mean, I'm sorry I took the liberty of answering.
Please.
Yes, but having said that, it is. We have seen. I mean, we have a investment banking arm, and when we started off, we used to sign engagements for 3 months, 4 months. And now we have been very transparent. We have seen deal life cycles getting really long. Even an angel round today takes about 9 to 12 months to close, unless you are too disruptive, and that would probably happen 1 in 1,000 cases, right? Diligence life cycles, even after post-term sheet, diligence life cycles are taking too long, and even getting a term sheet doesn't ensure that you will be able to close the funding successfully. So definitely, I think investors are really conscious, and that's also we also need to look at it from a positive side, that Indian startup ecosystem is on its journey to become mature, right? And that's why I tell people that it is the right time for you to start up, because if you start up in 2030, probably already the rules of the law would be written in terms of how the startup ecosystem needs to function the way it is in the US, right? For now. So from that perspective, I think funding is going to be complicated. Just that from a volume perspective, startups are more, so number of deals might continue to increase. But percentage of startups who apply for funding versus percentage of startups who get it, I think that number is going to be lower.
Is that because the scale is higher, like many people applying for funding? Is that so?
Yes. So scale is higher. Investors are spoiled for choices as well. Moreover, investors also have become learned, right? Now, we are not in early 2000s where there was no VC ecosystem. People have been there, done that. They know where they have burned their hands, right? I mean, EdTech is a classic example where all of us know what has happened. In fact, some of very good EdTech startups in my portfolio, they are not able to raise money just because of the funding winter which continues in that particular sector, right? Despite doing all the right things. So absolutely, I think investors are more cautious, and somewhere startup founders also. So I'll not talk about all founders. Of course, there are some really good ones as well, but most startup founders think that funding is one thing they can do on their own. And in doing that, they end up spoiling their deals. I mean, a lot of clients come to me saying that, Abhishek, we have already reached out to 150 investors. They have said no. Now, what can you do for us? And then it doesn't leave anything for me to do. I mean, 150 investors you've already been to, or 50 investors for that matter. Then what do you expect? I mean, I don't have a magic wand, right? So it is important for someone to work with people who might be in this room or outside who know how it works with investors as well.
I mean, now it's more professional, right?
Absolutely it is.
Sandeep, as an investor, how do you choose a startup to invest in, right? What are those couple of things? And we also discussed about a lot of challenges.
Yeah.
So how do you think founders should go about it, dealing with them?
So let me take the second part because it's continuation of the discussions, the challenges and how to. I think, the point which Abhishek made, I just want to build on that. I think, one, let's be very clear, there is enough liquidity in the market. Yes. So nobody is short of money to put in. Mm-hmm. So I think, and especially there have been a lot of cases recently where startups have scaled up enough to go for IPOs, etc. Mm-hmm. So a lot of funds have been paid back, and very handsome returns. So there is certainly enough liquidity in the market. Sometimes what happens is, I think the founders get too ambitious with their valuations. Mm-hmm. Because they look at the best of the success stories and start comparing themselves with them. Mm-hmm. But the fact remains, valuation game doesn't work that way. And the point which Abhishek was making of going to a professional, I think is also required because they can build some sanity into the heads of the founder. And I'm using the word sanity a bit loosely here because we like to believe that we are the best. Are we the best is not what I believe. It's what others believe, whether, I'm good at what I do. So I think, to be able to scale down your expectations around valuations to reasonable levels. I would even say you want to raise a smaller round at a lower valuation, deliver what you are committing, and then go for the next round. Mm-hmm. And that brings me to the second point. Sometimes founders are overcommitting in terms of the metrics. You give us this round and this is what we will build. Mm-hmm. And founders sometimes don't even reach 40%, 50% of that. And that is a yawning gap. And that obviously impacts your next round because this word goes around. And I think just staying on this point, I have seen lately investors becoming very intelligent, cautious, as was being said. And I have seen now valuations getting pegged to metrics. Saying, okay, I will put in so much money. You are expected to scale up to this level. If that doesn't happen, the valuation gets adjusted. Yeah. So there is a dilution which happens related to metrics rather than anything else. So, all these things are coming in the market. Investors are becoming more educated. But I think founders, entrepreneurs also have to be a bit more realistic about valuations and willing to look at things a little differently. Yeah. So that was on the challenges piece. On what I look for, I have a very simple funda and I call it PI actually, where P stands for the problem that you're solving. Really, genuinely, is there a need in the market for that problem? Need that doesn't exist in the head of the entrepreneur, but is a really researched need. So that's one problem. Second is the individual himself, the founder. Great capability to be able to bring that idea or vision to reality. And third is obviously the execution. That do they have enough to be able to really take this idea to the next level? So those are the three criteria. And then obviously one can go, when you talk about problem, you can go into product market fit and all those kind of things. But broadly, these three things is mine.
And Manish, about what Sandeep just suggested, what do you think about those points?
So the pie.
Yeah.
I think very relevant. I think it's, you have coined the word pie. I think that's probably the way to go about it. I think so. I totally agree. As for if somebody is starting new, right, and first of all, they need to understand there's a problem. They're solving it, but there is already something being solved all around as well. So somebody is already trying it. So is your solution 10x better or 100x better? That is what you need to come up with. I think unless you have that kind of level of improvement you are bringing to the table, I think nobody will listen to you. Because you can always do it 2x, 3x by doing some adjustments, right? But you have to go a little, I would say, out of the box thinking, how you solve it. I think that's very important. Right. And I think individual, as you said, individual is important because you tie yourself with the problem and also pivot around and not with the solution. I think that's the individual, that's his way of thinking, way of going about it, because then he's tied to the problem. So the individual is very important because what is his psychology? I think that you need to understand. If you put the money, are you putting into a person who is just steadfast, I have to solve it like this? No. I think, is he saying, I have to solve this problem no matter what? I think that is how you should look at it, right? And execution, certainly it's a team formation, right? Is that person capable of forming a team? Has he already got a team? And how are they structured? How does the cap table look like? Probably, right? So I think those are very important questions. I totally agree, and I would just back him totally with that. Yes.
Yeah, I mean, I'd say I'm least experienced to comment on this topic, but what I feel is that sometimes people have the right product market fit, but it's at a higher cost. And in a market like India, when your price is not right, your product might suffer, right? Like if you remember, Abhishek, we spoke about during our podcast for the AI offerings.
Absolutely.
And they being so expensive that people who want to use it can't use it, right? And I think that is also a extra chink in the armor when you are selling in India, right? So that's something that I feel is also very important. As a consumer, I am saying, right?
So just to build on that point, and this is an interesting one because, a lot of times among investors, we discuss, and the phrase goes like this: do you invest on the horse or the jockey? Where horse is the idea and jockey is the entrepreneur. And I think a lot of times people decide to invest on the jockey because they believe that, if the jockey or the entrepreneur can pivot, he can move from one idea to another quickly and build that in spite of the failure. So, again, different ways of thinking, but
and for very early stage startups which are just incubating, so to speak, are they really aware of these things? And if they're not, what do you do to educate them?
So, first part to the question, thanks to platforms such as Shark Tank, etc., I think a lot of these guys watch Shark Tank and they are aware that, there is a pitch, there is a valuation. Even, people around us in our family, even my parents know now there is a term called valuation, right? So people are aware, but what they still lack is how to reach to a particular valuation or pitch. As he was saying, right? Valuation game is something which, if you as an early stage startup founder are trying to play right from the word go, rather than focusing on the need, the first thing that he spoke about, P, right? I think that becomes a bit of a challenge because let valuation be an outcome. Let it not be your sheer motivation. As an early stage founder, you need to be aware about two things. That's what I tell everyone, right? The first thing is what need, which he mentioned, you're trying to solve, and what is your value proposition to solve it. As Manish also said, are you doing it 5x better, 10x better? Because if you feel you don't have any competition, then you are mistaken. Honestly, you have no direct competitors, you have indirect, right? So that is the first thing I tell them. And second thing that I tell them is outsource the non-code, just focus on your product proposition for the time being, right? I mean, if you try to do it all, you want to, do marketing on your own, being a non-marketer, if you want to kind of do sales on your own without knowing how sales work, or you want to raise funds without knowing how funding would work, and you feel that platforms that you have been, cognizant about and following them, that equips you enough to raise funding, I think that's a bit of a what I should say, misunderstanding that you have, right? So focus on your core. I think that's most important.
And when people are focusing on the core product, if they see that it has not been taken up in the market in the way they were expected to, right? Then what do you do with it? Like, I mean, Sandeep, what do you think people should pivot to?
So I think the first thing is I would even go before that. And that is that, and this I'm telling you out of experience, a lot of times founders or entrepreneurs don't do enough research around the problem. They start believing that there is a problem. And the more they start believing, it's a little bit of a confirmation bias which keeps building. कि ये problem है वो problem genuinely problem है, and do people want to solve that problem at what cost, the point that he was making. So I think the first thing is to be able to research enough. But I can tell you almost in writing, 95% of the startups would not have run even a single survey with their prospective customer.
Yeah.
They would not have even observed their customer in their actual state of doing or solving that problem. How are they going about currently solving that problem? So that is the big piece. If you have researched that enough, I think there are more chances that you will build something which will really solve a problem, and hopefully. Now the fact remains that if it's still not happening, then you need to go back to the drawing board, because there's no point doubling down on the same strategy.
Right. Exactly. So basically what you're saying is that do the groundwork first before you get to a product, right? That is it really needed? And if you can you produce it at a scale or a price that is acceptable in the market, right?
Yeah, I would just like to add one thing. I'm sorry, Manish, but just to build on what he said, right? So validation is not only about your product. Validation, one thing that we tell the founders whom we work with is the first validation is the need validation. Have you validated the need?
Absolutely.
Or is it coming from your gut, right? If it is coming from your gut, okay, great. It's step one. But step two is take it out from your gut, get into the market, speak to potential customers, classify it as a critical need, or if it is a latent need which can become critical with time, and then start working on your MVP, right? So need validation is extremely important. Investors can work on guts, the gut feelings, but as a founder you cannot, right?
I can relate it with my actually journey, and I actually totally agree, because when we started IntelliInvest, we had a solution already. So we had I can solve the investing problem. So I had a algorithm based, data driven, all that, right? And it was generating alpha. But then it came down to, and then we started selling, right? And we had a product, we went live with it. We didn't see traction. Then I consulted a few experts like you, and Amit Bagade is one who actually successfully did the SimSim and of the fame, and he's one of our close friend. So we were talking to him. He said, have you done a market research? Have you just gone around the people in your society who have this problem of investing? How are they doing it? And why would they come to your product? So we did the research then, and the outcome, and that's very interesting. Nobody wanted phenomenal returns. Everybody wanted moderate returns. 90% people wanted just 30-40% return, which is nominal at that point in time, about a year back, because you were seeing 60-70% return. The next major portion, 70% of the people wanted capital protection. And the last piece was probably they just don't want to risk, right? Nobody want to take a risk with their capital, right? So I think that understanding, when it came, we adjusted the product accordingly. And then we started seeing a lot of people coming to us and then adopting, because now we were solving their problem. So we wasted some time initially, but the good thing was the engine was ready. So it just needed to be adopted to the customer needs. I think that is really a learning for us, and I think we have seen it work.
It was not a wastage of time.
Certainly.
Yes, I agree. Yes.
And also, I would like to hear from you. How do you get the product in the market, right? Where do you, how do you place it? How do you tell people that there is something in the market that you can use? some best practices that you've seen would be good to know from you. Sandeep, maybe you can.
So 2-3 things that come to my mind is, I think first, you absolutely explore a freemium kind of a model. But a freemium which is not an open-ended freemium. Give that period until if your product is genuinely solving a problem, it becomes a little bit of a bondage for the customer. And after that, it should seamlessly move into a subscription or whatever, depending on what it is, on that payment mode, let's say. So that is really the first. The second is to be able to find among your family, friends, network people who are willing to experiment with these products, and loosely speaking, I think those would be your evangelists. They will use the product, they will give you feedback, they will talk to people about it and hopefully convince others to use it as well. So those are really the two critical things. And then I think look at some kind of partnerships. And obviously nobody is going to give you customers without any cost. But the fact remains, can you do some kind of win-win deals where a large as in a substantial portion of the revenue earned goes actually to the people who connect you with customers. And this could be, as Manish and I were talking before this, well, even for B2C businesses, this could be a little bit like a B2B2C kind of approach. So how can you find those networks, those people, formally, informally, where they get a percentage of revenue for helping you get customers? So I think those are the 2-3 things that I would do, in the case of a new startup.
Abhishek, what do you think?
Yeah, no, I completely agree. And just a couple of things I would like to add there is, I think he talked about surveys a lot. It is absolutely important for you to continue talking to your potential to customers. Customers only tell you how they want to be serviced, right? So I personally have done a lot of GTM assignments for larger clients, smallish clients in my life. And the only thing that I learned was that nobody can tell you better than the customer how he or she wants to be serviced. So they will tell you how they become aware. They will tell you how they can be targeted. They will tell you what kind of price they are ready to pay, or whether they are willing to pay. And they will tell you that after the sales, what kind of relationship they want to be engaged with, right? So a customer tells you, how to kind of reach them and convert them. The second bit that I would like to just add to what Sandeep said was that even after you do GTM, and I think Manish gave a brilliant example, it is always important for you to continue going back to your ideation board and improvising them. It's not that you have designed a product, now you will continue waiting that, okay, when will the product, become successful? It is extremely important that you pilot, as Sandeep said, in a freemium model or whatever model it is. You learn, you quickly adapt. Even if you have to roll back the product for a while initially, it's fine. Do those changes, experiment, and then go back to the market when you are more informed about it. I've seen a couple of startups do that, who are getting, who are getting incubated with us, and I can see changes in terms of how they are digital startups, right? So how their MAUs numbers and everything has increased with time. So yeah, I think that summarizes it well for me.
Manish, how do you get your product on the market?
Yeah, you guys have broader. I go back to my startup and say, how do I do it? But see, going to the market, I think we said there's a funding winter. We said, we talked about the money not coming easily, right? But some dry powder is still there. So if you have a very valid idea, right, go to market, the money is waiting for you, right? So the first principle is to survive and then to excel. I think I just put it that way. Are you going to survive the next 1 year? I think that's the question which I have. And I always look at 1 year from now, have I got enough cash flows to cover it, right? Now, building those cash flows is about solving some real problems, getting some evangelists, because you earn from them also, right? Because if they're getting benefited, they will be fine paying back, right? So you will do that first. And then once you survive, you build your cash flows. We talked about unit economics as well. You go to the investor with the unit economics in play, it's much easier for you to convert, right? I think that's there. So if you look at the go-to-market strategy, it has to pivot around customer. So what the customer wants, you have to adjust, keep adjusting. I think these are small changes, but at the end of it, if you look at it, your product would have transformed totally in the next 6 months, right? Because you have adjusted, kept adjusting, right? And I think ours is a very evolving environment as well. So if we'll talk about fintech, I think it's a highly regulated environment. We saw that SEBI came up with a lot of curbs around derivatives trading. That impacted a lot of brokers. That impacted a lot of business model altogether. You might have heard Kamath saying that this is an industry where they can bring it to standstill. The regulators can bring it to standstill in no time at all. If you operate in that environment, I think regulation, you have to be on top of it, a little ahead of it. Do it a little more conservative than just crossing the boundary, right? Because there will be someday they will come and say, oh, there's no boundary. It has been so small, right? You cannot operate, right? So I think you just keep all of these challenges in mind and have customer at the heart of it.
Right.
I think that's how I would go.
Right. And I mean, I would like to share a story about the question that I asked, that how do you get your product in the market? Couple of years back, I heard of a coffee brand, and there was a lot of, hoopla on the internet and LinkedIn and everything else. But I really couldn't find that product anywhere. So eventually I went to a supermarket and asked them that, do you have that coffee? And they said yes. And it was lying in some corner, which is really difficult to find, right? So even if people want to buy it, you won't get it, right? Just from a perspective point of view, that you might have a good product, but if it's not there, then it's going to be really difficult to, thrive in a sense and get to where you want to, right?
No, and absolutely, whether it's physical space or digital space, you being there at the point in that customer journey when the customer needs you is really the essence of marketing or building a business.
Right. And also, we've talked about a lot of challenges and everything. Where do you see the opportunity now for early stage startups or people who are doing something new? Where do you see the real opportunity?
So I would like to answer that in terms of two levers. First is the sectors, and second is the kind of business models, right? In terms of sectors, personally, we feel anything which is close to climate, I think that's going to do well because of India's commitment to COP26 goals. And honestly, I'm already seeing increased number of startups in that area, be it in renewable, be it in EV mobility, be it in plastic alternatives, waste management, circular economy. I think Mr. Amitabh Kant said that circular economy is going to generate 1 million plus jobs for India in the next 5 to 6 years. So all these verticals are going to do well. Second bit is anything which is related to consumer. So even if you are a fintech or an edtech, but if you have an intersection with consumer, I think those models are going to work well. I think it is a point I'm iterating from my last podcast as well. Whatever said and done, our population, which we used to earlier consider as a curse, is actually a boon, and our spending power is still increasing. People say that our GDP per capita is low right now. For me, that's also an opportunity because it is moving up, and it will move up as the Indian economy continues to grow, which means very high disposable income, right, across 1.5, 1.6 billion people that we will be shortly, right? So I think that is the second sector. And third is wherever technology, AI is solving genuine problems for B2B or B2B2C use cases, even for B2C as well. But B2C, again, it becomes an idea of unit economics in the longer run, right? So somebody who is doing a great AI for a healthcare use case, for example, or we are working with a startup which is doing AI for renewable, where they can help solar energy producers reduce penalties which they have to pay because the government expects them to produce certain amount of electricity which they commit to, and driven by weather issues, the solar plants don't yield that well, right? So such kind of use cases will definitely go up. So that answers the first bit. In terms of business models, I think the gentlemen here with me have iterated as well. Anything which is B2B2B or B2B2C, wherever there is a B in the middle, is certainly placed well as compared to a pure B2C play or a pure B2B play.
Sandeep, what do you think about?
I think I quite agree with what Abhishek is saying. For me, we say green, sustainability. I like to use the word clean tech. I think that clearly is a segment which is not going anywhere in a hurry. And it's a flavor for decades, let's say. So that is first. Second, to my mind, particularly in India, two emerging sectors which I've seen really come from nowhere is defense tech and space tech. I think with government's focus on privatization, including more and more private players in the entire ecosystem, I think these are two great sectors and there's a lot of action happening here. He spoke about AI. I don't look at it as a sector. AI, I see it as getting embedded virtually in anything and everything that you are building to enhance the customer experience, feedbacks, and those kind of things. So for me, obviously that is. And then on the business models, I think he spoke about B2B or B2C. For me, I think one, and whether we can call it a business model or not, but I think quick commerce is something which honestly I'm surprised. 3 years back, I never thought this would become the industry it has become. And I must say, I've been very surprised. But the fact remains that now it is at that point that there is no going back. So you will only see, and this also means that products or services which can reach to the consumers the quicker within minutes of when they think about it. That's where your opportunity lies. From your point also, which you were saying, so whether it's a cost for you to be enlisted on a Blinkit or whatever, but I think you have to do it. There is no way you can survive without being on quick commerce channels. So those are some of the themes that I see really.
I mean, before the customer changes their mind that I'll buy something else, you have to be there. Right?
Have it on the door.
Absolutely. Or the customer will go in for something else, because again, if you're looking for something, there's somebody else. Some other company may not be the 100%, maybe a 99% solution, but the customer will go for that.
Right. And because Manish, you're doing fintech, how do you see, AI in fintech and otherwise? Because we've spoken about that AI is an enabler for startups. So what do you think fintech and others can benefit from?
Yeah, on AI, I would agree with Sandeep. What he said, it's an enabler. Is it the heart of fintech? Probably not. It has to work on the efficiency area. So you make operations efficient. You make everything automated, right? Not everything can be automated, but yes. In the fintech space, it has more to do because fintech is about, me being in wealth tech, probably there's a lot of information available in the market, right? And you need to just take it in and churn out something meaningful. Now that can be done through machine learning and all that, right? And you can call it AI as well. So while everybody calls generative AI as AI is more than that, right? So that machine learning part of it, which not many people are talking about. Everybody's talking about the chat thing, right? But that is one aspect. I think it's a machine learning aspect which is going to play a bigger role in the fintech space and many other spaces as well. It is already doing it, but it's going to play a bigger role because of the vast amount of the data which needs to be processed, which is available. And if you look at the economies are tight so much globally, India, so many things are happening. Can you predict what's going to happen tomorrow? Right? But if machine learning gives you that insight of saying this can happen with this much probability, right? And then you can backtest it and all that you can do, right? So you are getting a little better than yesterday all the time. That's an improvement journey. Right. And I think we have to take that journey in all. So it's just not fintech. It's not just wealth tech. It's everywhere we have to take that journey and move forward and leverage AI in that aspect.
Right. And because AI is being talked about so much, and I'm sure I know there is a regulation in the EU and there will be regulations elsewhere as well. So it's always going to be a little bit tighter, right? That how you can use it and how are you going to implement it. Those things are going to be there, right? So everybody will have to be a little cautious that how do they use it, like, think about it.
Just now, a paper came out on the 8th of January from SEBI. They say you can use AI in your research activities. You just need to tell the customer that this is based on AI and it has its probability, the disclaimers you put in there. So they have given it a green signal. It is much ahead of in other areas if you look at. It is just 8th of January and they have looked at it. I think that's a very good, it gives us a flexibility to leverage it more. And then people are the judge of it more than you. So accountability, accountability sits with us who uses AI, but then we put it as a disclaimer as well. So I think that's how it has been. I think regulators are coming in very well in this area, and I feel that is going to enable it more.
Right. And I'm going to not digress from the topic, but I'm just going to talk about the human side of it a little bit. A lot has been said about work-life balance in the last few weeks and months, and it has become meme material. What do you guys think about work-life balance in a startup setting, right? How do you do it, and how do you think people should do it in this area?
So maybe I can, if it's okay, I can share my views around it.
Please.
And I think we have to look at this from two perspectives. One is the entrepreneur, the owner. I think the owner or the entrepreneur, it's their decision if they want to spend 90 hours, 100 hours a week, whatever they want to do. I think they are intelligent people. They need to decide how much they want to spend. But for them to expect staff, their people who are only getting paid a certain salary and who are not really building the kind of business that you are building for yourself, it is unfair to expect them to do beyond a certain number of hours a week. So I think that's the way I look at it. Yes, you can probably motivate them to work beyond those hours out of choice. By then, you have to give them the right kind of incentives, build the right kind of culture. It should not be a compulsion. It could be out of choice sometimes. Having said that, I think we all should remember there is a certain amount of overclocking your body can take. And beyond that, it can't. It's going to reflect on your efficiency, on your mental alertness, on how motivated you feel, the next day, after spending the entire evening working. So I think at the end of the day, it's a little bit of a zero-sum game. There's nobody who can, continue to put in 100 hours a week for weeks at a stretch, let's say. So that's the way I look at it from two perspectives.
So I think Sandeep has anyways covered it, but every day in the newspaper, unfortunately these days, we are seeing young entrepreneurs getting some bit of healthcare issue, untimely deaths. I personally am a big connoisseur of work-life balance. And I feel that, so one thing is that, I absolutely agree with Sandeep that if the founder can find employees who can share his vision and they are suitably incentivized and they are voluntarily giving you time, right, then it's fine. But expecting them to clock hours is not the right thing, right? So that's number one. Number two, again, coming back to AI, as we were saying, can you use tools which can save some hours from redundant activities that you and your team are working, which is anyways consuming time? I think technology has helped us. I mean, right from invoicing to auto-replying certain client emails to, you can talk about use cases, right? Of late, I use Google Suite and Gemini is prompting me for with a lot of insights, etc., which saves my time. So how you can use technology to make your work-life balance better, not only for yourself, but even for your employees. And third, what activities you can outsource, right? You being a founder, you are running into the market, selling your product, then you're running for an investor meeting, then you're running for a marketing meeting. That doesn't make sense, right? So try to just focus on what you can do best. If you're a marketeer, you got a great guy to look after the product, let that guy handle the product, and you have a calendarized way of interacting with this person, right? So I personally feel that work-life balance should be built into the culture of a startup right from day one. Of course, it doesn't mean that you will get 8 hours days or 7 hours days, but it certainly doesn't mean that you need to be 70, 80, 90, three figures are floating in the market right now. You need to work those kind of weeks for sure.
Right. Manish, you are a founder.
Yes.
What about your work-life balance?
I think I would start it from the Mahindra. I think Anand, he said that it's a quality which matters, not the quantity which matters. So it is like how many hours you are putting. I have a very senior architect in my team. He says he's coding in his mind, right? So he moves around and he codes in his mind. He said, and then he sits for 2 hours and does it. But while he was moving around and he's going about, he's thinking and he's doing it, right? How many hours is he putting in? According to me, he's putting 24 hours. He's sleeping with that problem also. So do you really count it that way, right? But he does it for 2 hours and does it for me, right? But yes, he's doing it, right? So it's a quality which matters. I think I'm just coming to that. I myself, if I look at it, I'm an owner of a company, right? So for me, it's a 24 hours thing, sleeping, but work-life balance when you call it, but when I'm doing something else, right? I'm there, right? I'm with my kids, right? At the back of mind, something will be going on, right? It happens, right? So, but then I expect that from me. Do I expect that from my employee? Certainly not. But I have incentivized them through ESOPs and other things. So they know that if the company value grows, they also get something, right? So they're incentivized well enough for them to get motivated. And they own the task. That's all about me. It's about getting the task completed. How you got it done, you leveraged AI, you searched on the net, doesn't matter to me. I really want the task to be completed to not mediocre, but a good quality. And that is what my expectation is on the ground. I really don't go around. These days, we all work from our own places, right? We only get together only on occasions, right? So people are free. So how do we measure that? I'm not seeing them, right? So I really don't want to measure them on those hours. I am just on the outcome-driven approach of looking at what the productivity looks like. Work-life balance, they would be doing it. We can just say to them, of late, it has been a year, more than a year now. So what we have done now is we were spending a lot of time on Saturday and Sunday. So this time what we did was from this weekend, from this weekend onwards, we are saying Saturday, Sunday, nothing. We don't have any meetings. It's gone to Monday to Friday again. Totally. And this we have done it as a choice because it was eating into us, right? And then the family time was going away. So we also adjust. So this is an adjustment we have done recently.
Right. Yeah. And what I feel is that when you are working too much laboriously, after a point your mind kind of shuts down, right? Like you were saying, it just shut down and you can't think creatively after that, right? So I think there's a limit to everything. You know, there's an upper cap and there's a lower cap. Everybody is expected to work something, right? But
No, so I just want to build that point, and whether it's the founders or the employees, I think we have to respect, and we also have to be aware about what I call self-care or self-preservation. So sometimes employees may also have to stand up for, the fact that they are overdoing it. Just because they don't talk about it, the organization gets an impression that they are fine with it. But I think they also have to sometimes, and from a founder's perspective, I think, or for anybody's perspective, your self-care and self-preservation is in your own hands. How do I reset myself for the next day? What kind of things do I do to rejuvenate myself? Somebody may be doing something else, somebody may be playing a sport, somebody may be running, somebody may be doing yoga, whatever. But do you give yourself enough opportunities to rejuvenate and, care about yourself?
Right.
Because self-care is not selfishness.
Yeah, of course. It's a need.
It's a need.
Yeah. Right.
So,
we've talked about so much, but I want to do something different today since I have you guys here. So I'm going to ask one question and we'll go round robin like this.
Okay.
And all three of you answer the same question, right?
Do we get a hamper after this?
We'll see about that. Obviously the answers have to be a little brief because it's supposed to be rapid fire. So One startup that you admire the most?
Misho, reason for that being they're giving it back to the society. So it's different from Flipkart or the Amazons. It's different.
Right.
I will talk about two. One, International Patagonia, which is about, again, giving back and how the purpose is built in the product in some ways. And second is Zomato, because it surprised me in the sense, the way they've come back to profitability, etc., etc. I never thought it would happen. So I think.
Yeah. Again, like Sandeep, one from international, I really like the concept of Airbnb. Personally, the way he has really thought, he thought out of the box and kind of revolutionized the travel experience for a lot of travelers. And second, from an Indian context, I personally really admire Zerodha. Because right from the word go, Zerodha was never in losses, and today he is really giving it back to the country by building climate tech and fintech ecosystem in a way that I'm sure that the contribution, when you look at it in totality in terms of the portfolio he is building, the contribution of all those companies is going to define the GDP of tomorrow for India. So yeah, those are the two startups.
Right. And if any founder is struggling for funding, what advice would you give him?
Funding. Go to unit economics. Don't look. So if you're struggling with funding, then the business model has a problem. So you have to go back and look at the problem, solve it again, come back. So I think you just can't go places and find funds. It's not possible.
I think similar, but I'll build on that. And the point I made earlier, I think sometimes founders are also too sticky on the valuations that they expect for their business. It's better to raise small and at a more moderate valuation to wait for the next round.
Yeah. Focus on your core and work with someone who knows how to get funding for you. I think just to add to their list. Yeah.
Which is professional advice, get professional advice, right? Yeah. And if all of you are I'm just giving a hypothetical, all of you are though, but say all of you are investors and you had to pick one sector to invest in 2025, what would you pick?
Green. Go green.
I think between green and defense tech for me.
Yeah, I think climate tech is something which we anyway strategically have been prioritizing. So any vertical of climate tech. And to add to the list, I think space tech, defense tech is something also that we should look at. Absolutely.
Now we are coming to the end of our discussion. But before that, I can't let you go without you guys giving advice to, startup founders and people who are, hustling through their missions. So if you had one advice to give to any startup founder, what would it be?
Stick with the problem. Don't fixate on the solution. Keep pivoting till you find the right product market fit.
Sandeep?
I think I would say think big, start small, stay relentless.
Okay.
Yeah, start now. This is the right time. Startups contributed to under $100 billion this year. 2030, they say startups are going to contribute 1.6 trillion. So be a part of that journey. And definitely focus on validation, right from the need validation to product validation. Yeah.
Thank you, gentlemen, for being on the show on this cold morning. And I hope that we'll talk soon again. And thank you so much and see you soon.
Thank you.
Thank you.
Thank you.
Thanks, Dipankar.
Thanks.
Manish, Abhishek, thank you.
Thank you. Thank you.